This is Al Brooks. Thank you for watching the Brooks Trading Course. This is the first of 5 videos on trading the open. First, I want to begin by discussing what I mean by the Forex open. Next, I want to talk about gaps. Gaps are rare in the Forex market, but they sometimes can be extremely big. The Forex markets are considered to be 24-hour markets with no pause between the different sessions. The market is closed at 2 p.m. on Friday Pacific time, and it opens again on Sunday at 2 p.m. And throughout the 24-hour sessions, starting on Sunday, it trades like one big session. Depending on where you are in the world, most traders pick one of the 3 sessions to trade. There's an Asian market, and then the European market, and then finally the US market at the end of the 24-hour day. I want to draw a distinction between the Forex markets. I'll use a 5-minute chart of the euro versus the dollar, and the E-mini, and I'll use a 5-minute chart of that as well. Instead of the E-mini, I could use any stock on any exchange, but I'm going to use the E-mini to make the following point. For E-mini traders or stock traders, or any stock index futures traders or bond traders, dividing the session into 3 parts is usually pretty helpful. That's because traders look for a swing at the start of the day, does not always happen, and they look for a swing at the end of the day, does not always happen, and then everything else in the middle is that middle third of the day. It's never exactly 1/3 of the bars on the open and 1/3 of the bars on the close, but they simply look for some kind of trade on the open, and then they look for some kind of trade at the end of the day, and then whatever happens in the middle of the day, they trade it, but their main focus is the open and the end of the day. And that's not the case in the Forex markets. Forex markets tend to have fewer swings and smaller swings, and instead of having a swing at the end of the day or the end of the session, they tend to get very quiet. E-mini typically will have 2, 3, or 4 swings during the day. Forex market in general will have 1 or 2. What's important to pay attention to is a change in the price action. If the market is in a trend, look for a change into a trading range or an opposite trend. If it's in a trading range, look for a change into a trend in either direction, and then trade appropriately. If it's a trading range, you're looking to buy low, sell high, and scalp. If it's a trading range, you're looking to swing at least part of your position. Forex markets typically become very quiet late in the trading day in the US session. Around 11 o'clock or so Pacific time, the market tends to go sideways for the next couple of hours until the end of the Forex day, the Forex 24-hour day. Therefore, between the US session and the Asian session, which is the start of the next day on the daily chart, the market usually is in a tight trading range. Sometimes it starts earlier. Here it started at 9 o'clock. Sometimes it starts later, like at noon or even 1 o'clock, but usually sometime around 11 o'clock, the market enters a tight trading range. And when it looks like that, stop trading and just wait for the next session or the next day. Here, many of the bars are only 3 pips tall and the entire range is only 15 pips. When you're trading, you should never be going for a scalp that is less than 10 pips in any Forex market. Also, you prefer the range to be at least 3 times the size of that minimum scalp if you're looking to scalp in the Forex markets. Therefore, if the range is less than 30 pips, maybe 20 pips, you should not trade at all and simply wait. E-mini, the minimum scalp is 1 point, and on this particular day, the range is about 16 points tall, and therefore it's 16 times the size of a minimum scalp. In the E-mini, the minimum scalp is 1 point, and here in the final third of the day, unlike in the Forex market, the range was 16 points from top to bottom, and that's 16 times the size of a minimum scalp, and therefore there's plenty of opportunity to make money, either as a swing trader, selling closes, buying a reversal, or as a scalper. This is a 5-minute chart of the euro versus the dollar, and it covers many days. And the point I want to make here is that when one session ends and the next session begins, there's usually not much of a gap at all, if there is a gap. Here we have 9 trading days. Each day has 3 sessions, Asian session, the European session, and then the American session, and there are no gaps, or the gaps are very tiny. Even when the market is closed, for example, on Sunday afternoons, there are no significant gaps even after the market closes at the end of the American session. Usually there's not enough news during that brief interval between the end of the US session and the start of the Asian session to create a gap. And that's because there is no financial market that is open during that interval. There's no news. If a trader is looking to trade the open of the day, the trader is a day trader. A day trader is typically going to use a small time frame chart, like a 15-minute chart or a 5-minute chart. Most of the examples I use are 5-minute charts because that's how I usually trade, although I do take some trades on higher time frame charts, like 1-hour charts or 4-hour charts or daily charts, rarely even on weekly charts. I said that gaps are typically small in the Forex market, but that's not always the case. This is the dollar versus the Swiss franc 5-minute chart. Normally, if there is a gap, it'll be a 1-pip gap, maybe a 2 or 3 5-pip gap. The gaps are so small that traders should ignore them. They're not big enough to lead you to structure a profitable trade. Rarely there'll be some major news event and it can create a huge gap. For example, here's a 1300 pip gap at the end of the Asian session and the start of the European session. Extremely rare. This happens once every 5 years, 10 years, but it's real. And if you were long here at the end of the Asian session and the market gapped down like that, you could lose a lot of money. The European session and the American session tend to overlap. Where does the European session end? Where does the American session begin? Well, they actually overlap. The stock markets and the financial markets in Europe are still open when the American financial markets open, and therefore there's some overlap. They basically trade like one big session. There's often a pause, tight trading range, and then a breakout down or up or in both directions when the American session becomes more important. End of the day, dead money. The day ends with the US session, and very often, most days, the market enters a tight trading range and it's not worth trading. If you look at a daily chart, the open of the bar on the daily chart corresponds to the open of the Asian session, and the close of the bar on the daily chart corresponds to the final trade in the American session. This is the close of this day, and this is the open of this day. US sessions usually end with tight trading ranges. Asian session sometimes overlaps with the European session, but usually there's a period when the market is in a fairly tight range. Usually the tight trading range that follows the American session until the end of the day, the 24-hour trading day, is so tight that it's not tradable. Sometimes the tight range after the Asian session and before the European session has enough of a range so that traders can trade it while they wait for a bigger move after the European session opens. The tight trading range after the American session typically is 2 to 3, 4 hours long. Sometimes instead of a tight trading range, the market can have a tight channel that does not go up or down very far. For example, right here. As a trader, if you want to know when a session is beginning, what you look for is some kind of a breakout, a big trend bar up or down, or a series of trend bars up or down. And at that point, traders become interested in trading because at that point it's easier to make money. Very difficult, impossible to make money like this. Very difficult to make money like this. But once you start to get a breakout one way or the other, traders begin to trade. The breakout can be one very big bar, two big bars, or 3 or 4 smaller bars. This is the start of the Asian session. This is when traders would start trading. They see a series of bull trend bars. They think that it could be the start of a trend up. Here we trade down for about 6 bars, and we have 3 consecutive bear bars, decent-sized bodies closing on their lows. This is when traders would begin to trade the European session. Sometimes there's a gap after the Friday close and the Sunday open. For example, this is the end of the US session, which corresponds to the close of the bar on the daily chart. This is the start of the Asia session. In this particular case, this is a Friday and that's a Sunday. And you can see there's a small gap. Usually after 1 o'clock to 3 o'clock, the movement is very small. But here on a Sunday, you often get a big move. 50% of the time, the big move is in the wrong direction. Therefore, you can get a strong rally and do not conclude that it's the start of a huge trend. 50% chance that if you have a big move on the open of the week, in this case, or the open of a day, the move is going to be in the wrong direction. It could be, in this case, a buy vacuum test of some kind of resistance. The market concludes it cannot get through the resistance and therefore tries to go the other way. I do not have the resistance drawn in here. Small gap down at the start of the Asian session, which is, in this case, since it's a Sunday, it's also not only the open of the bar on the daily chart, it's also the open of the bar on the weekly chart. I talked about the Forex open. There's one open a day. It's basically a 24-hour market, and that open is the start of the Asian session. And then the close of the bar on the daily chart is the close of the US session. Usually the US session enters a very tight trading range in the final 2, 3, or 4 hours, and it's not tradable. The Asian session often overlaps with the start of the European session. The market typically goes quiet for an hour or two during that overlap. Most of the time it's not worth trading, but sometimes it does move enough to trade. The European session overlaps for an hour or two with the American session, and that's because the financial institutions are both open at the same time in both countries, and therefore traders can trade Europe and the US as one session. Gaps are rarely big. Forex markets are basically 24-hour markets, but there's a gap in time between Friday's close and the Sunday open, and sometimes there's news there that can create a gap. Usually the gap is going to be small. There can be a huge gap at the start of any session if some unexpected news comes out, like at the start of the US session, or the start of the Asia session, or the start of the European session. I gave an example of a huge gap that occurred with news at the beginning of the European session. I'm Al Brooks. Thank you for watching the Brooks Trading Course. This is the first of 5 videos on trading the open.